Have you ever wondered about the role that money plays in your life? You make use of it when you buy your morning coffee, pay your rent or mortgage, donate to a charity, and save for your future. Money is an essential part of our daily lives, but have you ever thought about how it works, where it comes from, why it has value? The origin of money can be traced back to the earliest human societies, where people engaged in barter, the exchange of goods and services for other goods and services. For example, a farmer might exchange some crops with a blacksmith for a new plow. However, as economies become more complex and people's needs and wants diversified, barter's limitations became apparent. This made bartering cumbersome, inefficient, and time-consuming. To solve this problem, people began using commodities with a widely recognized value as a medium of exchange. For instance, in ancient Egypt, barley was used as a unit of account and medium of exchange. In other parts of the world, shells, beads, salt, and even large stones were used as forms of currency. As societies grew more complex, governments and merchants began to issue standardized coins made from precious metals, such as gold or silver. Using these coins as currency had several advantages over earlier forms of money. For one, they were portable and durable, making them more convenient to use. Moreover, the value of these coins was widely recognized, facilitating trade both within and between countries. However, the use of precious metal coins was not without its drawbacks. For one, the availability of gold and silver could be limited, hindering economic growth. This led to the emergence of paper money, which was first used in China during the Tang Dynasty between 618 and 907 AD. Precious metals backed this paper money, and the notes could be exchanged for the metal on demand. In recent years, the rise of digital currencies such as Bitcoin has challenged traditional notions of money and currency. These cryptocurrencies are decentralized, meaning that any government or financial institution does not control them. Instead, they rely on complex algorithms and blockchain technology to maintain their value and integrity. No doubt that this evolution of money has been driven by the needs and wants of human societies. So, how does this money work? Stay tuned till the end, as you will be surprised by what will be revealed to you. Money is the lifeblood of the global economy, enabling billions of transactions to occur daily. So, how has this been possible? Money isn't just a tool for buying and selling goods and services. It also serves three main functions that are critical to the functioning of the economy: a medium of exchange, a unit of account, and a store of value. Let's start with the first function, medium of exchange. This means that money is used as a medium to facilitate transactions between buyers and sellers. In the past, people relied on barter, which involved the direct exchange of goods and services. However, this was often inefficient and impractical. With the invention of money, people were able to trade more easily and efficiently. Imagine trying to trade a car for a cow. Not the easiest thing to do. But with money, you can easily exchange cash for a car, or anything else for that matter. The second function of money is the unit of account. This means that money is used as a standard measure of value for goods and services. For example, if you want to know how much a product costs, you can look at the price tag, which is denominated in a particular currency. This allows buyers and sellers to compare prices and make informed decisions. Without a unit of account, it would be difficult to determine the value of goods and services. The third function of money is the store of value. This means that money can be used to store wealth over time. In other words, it's a way of preserving purchasing power. You can save money in a bank account, or invest it in stocks or other financial assets, and over time, it may increase in value. This allows individuals and businesses to accumulate wealth and plan for the future. However, these three functions of money are interconnected and interdependent. Without a medium of exchange, it would be difficult to use money as a unit of account or store of value. Similarly, if money loses its value over time, it becomes a less effective store of value, which can have a ripple effect on its use as a medium of exchange and unit of account. So basically, the three functions are equally essential to the functioning of the economy. The way the government raises and controls money also explains how money works, and this is done through a combination of taxes, borrowing, and monetary policy. Let's take a closer look at each of these methods. First up, taxes. Governments raise money by levying taxes on individuals and businesses. This can include income, sales, property, and many other types of taxes. The money collected from taxes is used to fund public services and programs such as healthcare, education, infrastructure, and defense. Taxes can also be used to influence behavior, such as discouraging smoking through high taxes on cigarettes. Next, borrowing. Governments can borrow money by issuing bonds, which are essentially IOUs that promise to pay a certain amount of interest over a set period of time. Investors, such as individuals and institutions, buy these bonds and earn interest in return. Governments can use the money they borrow to fund projects or pay for expenses that they don't have the current revenue to cover. However, borrowing comes with its own risks, such as increasing the government's debt and interest payments. Finally, we come to monetary policy. Now, this is the process by which central banks, such as the Federal Reserve in the United States, control the money supply and influence interest rates and inflation. Central banks use tools such as open market operations and quantitative easing to influence the money supply. Open market operations involve buying and selling government bonds in the open market, which can affect the amount of money in circulation and interest rates. Quantitative easing is a more extreme form of open market operations, in which the central bank buys large amounts of government bonds or other assets to inject money into the economy and stimulate growth. Central banks can also set interest rates, which can affect the cost of borrowing for individuals and businesses. Lower interest rates can encourage borrowing and spending, while higher interest rates can encourage saving and discouraging borrowing. Central banks also aim to keep inflation in check by managing the money supply and interest rates. As we know, money is a medium of exchange, a unit of account, and a store of value. In the stock market, money is used to buy and sell stocks and other securities. Investors use money to purchase shares of stock in publicly traded companies, which gives them ownership in those companies and a potential share in the company's profits. Brokers, who facilitate these trades, earn a commission on each trade, which is a way they earn money. They play an important role in the market as they match buyers and sellers of securities, help investors navigate the market, and provide research and advice. Analysts, on the other hand, study the financial performance of companies and provide insights and recommendations to investors. Their analysis is an important input for investors to make informed decisions about buying and selling stocks. The analysis is often reflected in the stock price, which is how much a stock is worth in the market. The stock market is also impacted by macroeconomic factors, such as interest rates and inflation, which the government and central bank control. Monetary policy, such as quantitative easing and open market operations, can impact the supply of money in the economy, which in turn can affect the stock market. Therefore, the stock market is a key player in how money works, as it provides a way for individuals and institutions to invest their money and potentially earn a return. Money is a fundamental concept that drives our economy and daily lives. Understanding how money works can help us make better financial decisions, navigate the stock market, and plan for the future. Whether we're saving for a rainy day, investing in the stock market, or paying taxes, money is always at the forefront of our minds. That'll be all for today's video. Thanks for staying tuned. Please don't forget to hit the subscribe button and notification bell so you can always get to watch more amazing videos like this. Make sure to check this next video chosen for you. See you there!